Picture this. It's 2025, to be exact, because that's where we're at today and you're scrolling X, sipping your morning brew when you see it. Some dude's bragging about how he bought Bitcoin at $1,000 back in 2017, and now he's sipping pina coladas on a beach, retired at 35. Meanwhile, you're stuck wondering if your 401 or whatever retirement stash you've got will even cover rent in 20 years. Inflation's creeping up, the stock market's doing its roller coaster thing, and here's Bitcoin, this shiny digital coin, dangling like a golden carrot. Could it be the move for your golden years? Should you jump in and stack those sats to cash out when you're old and gray? Bitcoin's been a wild story since it popped up in 2009, created by some mystery genius named Satoshi Nakamoto, who ghosted the world after dropping this bombshell. It's gone from pennies to peaking near $100,000 lately, making millionaires and breaking hearts along the way. People are obsessed. Some call it digital gold. Others say it's a scam waiting to crash. And now, with retirement on your mind, you're wondering, is this my ticket to chill later? Or am I about to bet my future on a digital dice roll? We're going to break it all down, why it's tempting, what the experts say, the risks that'll keep you up at night, and how to play it smart if you're feeling bold. Think of this like a late night chat with your bestie who's obsessed with finance and won't shut up, except I've got data, not just vibes. Let's dive in. First things first, let's get you up to speed on Bitcoin, because you can't decide if it's retirement worthy without knowing the deal. Imagine money, but it's not paper or coins, it's code, living on the internet. No banks, no government bigwigs printing more whenever they feel like it. Bitcoin runs on this tech called blockchain, a giant, unhackable ledger that tracks every coin ever made. There's only 21 million Bitcoin ever going to exist, hard limit, baked into the system. Compare that to dollars where the Fed's like, let's churn out a few trillion more, and you see why people get hyped. Back in 2010, you could snag a Bitcoin for less than $1. Fast forward to now, February 2025, and it's hovering around $95,000 to $100,000, depending on the day. That's nuts, right? If you toss $1,000 into Bitcoin in 2016, you'd have about 1.57 BTC, worth close to $150,000 today. Go back further, and the numbers get silly, like $1,000 in 2011 could have made you a multimillionaire. No wonder folks are eyeing it for retirement. It's like finding a cheat code for wealth. But here's the catch. It's also crashed hard, like 80% drops that'd make your stomach flip. So, is it a rocket to riches or a roller coaster to ruin? Let's figure it out. Okay, so why is Bitcoin even on the retirement radar? Let's paint a picture. You're 35, grinding away, stashing cash in a savings account or some boring index fund. Inflation's at, say, 3% a year. Doesn't sound bad, but over decades, it's quietly eating your money's value. Traditional retirement plans like a 401 or IRA rely on stocks and bonds, which grow steady, maybe 6 to 8% a year if you're lucky. Solid, but not sexy. Then Bitcoin struts in, flexing returns that make your jaw drop. Since 2011, it's averaged over 100% annual growth some years, way more than stocks, gold, or real estate. Even with the crashes, the long game looks juicy. Take my buddy Mike. He's not real, but let's pretend. In 2015, Mike's 30, making decent cash as a graphic designer. He hears about Bitcoin, shrugs, and throws $500 at it, about 2 BTC back then. He forgets about it, lives his life, and now, in 2025, those 2 BTC are worth $190,000. He's not retired yet, but that's a fat chunk of his future nest egg from one random bet. Stories like that light a fire under people. Finance Monthly ran a piece in 2021 saying crypto's inflation-proof vibe, thanks to that 21 million cap, makes it a dream for long-term investors. No central bank can flood the market and tank its value like they can with dollars. Plus, it's not tied to stocks or bonds. When the market crashes, Bitcoin might dip too, but it often dances to its own beat, giving you diversification vibes. And check this. Fidelity dropped a study in 2024 showing a 5% Bitcoin chunk in a retirement portfolio could boost your spending power in old age by 8.5%, even if it's volatile. That's real money for cruises or grandkid gifts. The hype's not just hot air. Big players like BlackRock and Morgan Stanley are dipping toes in with Bitcoin ETFs, making it feel legit. So, yeah, the temptation's real. But before you cash out your savings, let's talk risks, cause this ain't all rainbows and lumbos. Alright, let's flip the coin, literally, cause Bitcoin's a gamble that'd make Vegas blush. Picture this. It's November 2021. Bitcoin's flirting with $69,000 and everyone's a genius. Then, bam, by June 2022, it's down to $20,000. That's a 70% gut punch in months. Or go back to 2018. After hitting $19,000, it tanked to $3,000 quick. Volatility is the name of the game, and for retirement, that's scary as hell. You don't want your nest egg playing hopscotch when you're 65, trying to pay for meds or a beach condo. Forbes ran a piece in 2023 screaming, avoid crypto in retirement, and they've got a point. If you're close to cashing out, say 55 or 60, that kind of drop could wreck you. Imagine saving for 30 years, tossing 10 grand into Bitcoin at $50,000, and then it craters to $15,000 right when you need it. Ouch. Even Fidelity's rosy study admits, if Bitcoin goes to zero, you'd lose 3% of your annual spending power at 65. Younger folks might ride it out, but time's not your friend later on. Then there's the sketchy stuff. Crypto's still the Wild West. Hacks happen, like the $600 million Binance snafu in 2022, or MT Gox losing 850,000 BTC back in 2014. If you store it wrong, lose your private key. It's gone forever. No bank to call, no FDIC to save you. And regulation? It's a mess. Trump's talking a Bitcoin reserve in 2025, but the SEC's still figuring out how to tame this beast. Scams, fraud, shady exchanges, Kiplinger flagged, all that last year. Plus, no one knows if quantum computers could crack Bitcoin's code someday, turning it to digital dust. So, yeah, the upside's insane, but the downside's a horror movie. Retirement's about stability, slow and steady, not will I be a millionaire or broke vibes. Let's weigh it out more. Time to nerd out, because I promise science and we're delivering. Psychologists and finance gurus have studied why risky bets like Bitcoin hook us. Dr. Richard Smith, in The Joy of Pain, says humans love chasing shiny things, especially when we see others winning. It's social comparison on steroids. Mike's beach retirement sounds sweet, so you want to copy. But the Journal of Personality and Social Psychology warns that thrill comes with blind spots. We overestimate wins, underestimate crashes. Fidelity's 2024 Monte Carlo simulations say a little Bitcoin, 2 to 5% of your portfolio, could juice your retirement cash flow. For a 40-year-old, a 2% stake might add 4% to your yearly spending later, with only a 0.5% hit if it flops. Promising, right? But Charles Schwab's Rob Williams isn't sold. He told folks in 2023 that crypto's too unregulated and volatile for your nest egg's foundation. He's all about stocks and bonds, proven winners over decades. Then there's gold, Bitcoin's older cousin. Gold's up 30% in 2024, steady as a rock, while Bitcoin's 120% surge comes with whiplash. Cointelegraph compared them. Gold's reliable. Bitcoin's a roller coaster with bigger potential. Financial planner Ivory Johnson told CNBC in 2022, only toss in what you can lose. If Bitcoin hits zero and you're still paying rent, you're golden. Risk tolerance matters. How much chaos can you stomach? Let's make it real with some tales, half true, half vibes, all lessons. Meet Jenna, 28, a barista with big dreams. In 2020, Bitcoin's at $10,000 and she drops $200, 0.02 BTC. Forgets about it, keeps pouring lattes. By 2025, it's $2,000. Not retirement cash, but a solid boost. She's stoked, starts DSTNG to stack more. Smart, right? Spreading risk over time. Now meet Tom, 55, a mechanic nearing retirement. In 2021, Bitcoin's at $60,000 and he goes big, $50,000 from his savings. By 2022, it's $20,000. He's sweating bullets, can't touch it for years, but that's half his nest egg torched. Lesson? Timing's brutal, and big bets late in the game are dicey. Then there's Priya, 42, a tech nerd. She's cautious, puts 3% of her portfolio into Bitcoin in 2023 at $30,000. It's $9,000 now. She's got stocks, bonds, and a Roth IRA too. Diversified like a boss. If Bitcoin moons, she wins. If it flops, she's fine. Balance is her jam. All right, decision time. Should you buy Bitcoin for retirement? Here's the playbook, step by step, no BS. Step 1, know your risk vibes. How old are you? How much can you lose without crying? If you're 30 with decades to play, a small Bitcoin bet's less scary. You've got time to recover. At 60? Maybe chill. Stick to safer stuff unless you're loaded and love a thrill. Business Insider says crypto IRAs are for the bold, not the faint-hearted. Step 2, size it right. Experts agree, don't go all in. Fidelity says 2 to 5% of your portfolio is the sweet spot, enough to ride the wave, not enough to sink you. Say you've got $100,000 saved, $2,000 to $5,000 in Bitcoin. If it 10Zs to $1 million per coin, you're set. If it flops, you're not homeless. Step 3, dollar cost average like a pro. Don't dump a lump sum, too risky. Buy $50 a month, rain or shine. When it dips, you get more. When it soars, you're in early. Investopedia's 2022 survey showed millennials love this. 30% plan to lean on crypto for retirement this way. Step 4, store it safe. Get a hardware wallet, ledger, or Trezor, like $100 tops. Forbes says this is crypto's Achilles heel. Guard it like gold. Step 5, diversify, dude. Bitcoin's cool, but don't ditch stocks, bonds, or real estate. Priya's winning because she's spread out. Finance Monthly says crypto's uncorrelated, great hedge, but not your whole game. Step 6, tax hacks. Crypto IRAs let gains grow tax-free. Till you pull out. U.S. News loves this for long-term plays. Roth version? Pay tax now. Cash out tax-free later if Bitcoin explodes. Step 7, watch the world. Trump's pro-crypto vibes in 2025 could pump it, or regulators could crack down. Stay woke. Cointelegraph says sentiment drives prices big time. So, should you buy Bitcoin for retirement? Yes, maybe if you're youngish, risk-happy, and smart about it. A small slice, 2 to 5%, could turbocharge your stash, hedging inflation and boring markets. But it's not a sure thing. Volatility, hacks, and uncertainty could bite. If you're near retirement, nah, stick to the classics unless you're just playing with extra cash. Think of it like this. Bitcoin's the spicy topping on your retirement pizza. Stocks and bonds are the dough and cheese. Too much spice, you're choking. Just right, it's a flavor bomb. Balance it. Stay chill, and maybe, just maybe, you'll be that beach retiree sipping cocktails off BTC gains. What's your move? Hit me up, we'll vibe about it.